Welcome back to the Banking on Digital Growth podcast. I'm your host, Derik Kraus. I am joined in this episode today by Mike Lawson, who is with CU Broadcast, and I have appreciated that work that Mike has done for a very long time now on the CU Broadcast front. He facilitates a lot of great conversations, and I'm really excited to have him on the show where we talk about what Mike deems a member succession plan for credit unions. The idea being that for many credit unions, they are experiencing an aging membership and struggling to get the rising generation and younger generations to sign up with their credit union. And if you're a bank, you can think about this in similar terms. I think the same problem exists for both credit unions and banks. And Mike and I talk about what is the cause of this problem? Why is it that financial institutions are experiencing challenges with getting younger generations to sign up for their services? And why are they instead gravitating toward fintechs and neobanks? And if you have been a follower of this show, you'll know that I've talked a lot about the innovator's dilemma, and a lot of what Mike observes and what I observe and we talk about in this episode has a lot to do with that. Things like the impact of technology and also the commoditization of financial institutions and the need for differentiation, and how there's a brand new wave of technology and AI that is going to be impacting financial institutions. I think you'll find this a very interesting episode, and I hope you learn something valuable that you can take back and implement in your own financial institution. Let's dive in. Hey, Mike, welcome to the show.
Hey, Derik. How are you, sir? Good to see you again.
Yeah, we've been trying to get on this podcast recording for a while. I'm glad we finally made it happen.
Like a decade, sir. Like a decade. Yeah, it finally happened. The things I had to do just to get on today's recording. Oh my gosh. That's a whole podcast unto itself.
Yeah. You had the carbon monoxide alarm going off, and then the dog was freaking out.
Dogs were going crazy. Yeah.
And then audio and video issues for us. So yeah, we finally made it.
Quite the adventure. But we're here, and that's all that counts.
Yeah.
I think. Yeah.
Yeah. And so speaking of that, well, I guess first a little tidbit of what we plan to talk about for everyone listening, but then I want to hear about this bird, because we were talking about pets, and I said, wait, let me hit record. And then it sounds like you got a great story there. So, but what we plan to talk about is, now what was the term that you said, a member succession plan?
Member succession plan. The credit union industry needs a member succession plan. That's because the credit unions need to get younger membership wise. And I think just about every credit union out there will probably nod their head in agreement that in order to sustain any type of business in any type of industry, you need to have a continuous flow of customers, or in this case, members, especially the younger ones coming up through the ranks. So so that's a big deal.
Okay. Yeah, I have lots of thoughts about that and some firsthand experience there. So let's talk about that. But cool. Tell me about this bird. It sounds like there's a great story behind it.
My wife, God bless her, she loves bringing home animals. So yeah, sounds like you got all the animals that we have in our household right now, 2 of them are right here in my office. One's laying on the ground, the dog's on the ground, the cat's on the couch. The other dog's in the other room, and the other cat's upstairs doing who knows what. But then we have a bird, and she brought all these animals home. I love them. I'm an animal person. But yeah, just give me a heads up that you're bringing animals home. That's all I ask. But anyway, that's a whole nother show. So the story behind the bird is my wife was taking our daughters to gymnastics, and they had just parked the car in the gymnastics gym parking lot, and a bird flew and ran into the window of their car.
Oh,
just
wow.
as they parked, and just went bam, just ran and just kind of knocked it silly. And so they watched the bird for a while, and then it walked over and it fell off this little, like, I don't want to say a cliff, but that's too big, but it was just like a little embankment, and it fell into this little pool of water, and it was drowning. So my wife and my girls, they get out and they go rescue this bird from drowning out of this little pool of water. Yeah. And I guess it was still stunned from hitting the window of the car. Yeah. So anyway, so they take it to the local vet in a box. And so the vet takes care of it, dries it off. And my wife is going, this is such a pretty bird. If anybody doesn't claim it, can we have it? And so the vet
it was a domesticated. So it wasn't a wild bird. It was a domesticated bird.
It's a pigeon.
Okay.
It's a pigeon, but it's a fancy pigeon. So they're figuring it belonged to somebody. I just think it's a pigeon. So anyway, that goes fine. We'll call you in 36 hours if nobody takes this bird. 36 hours rolls along, and my wife calls back the vet, and they go, oh yeah, no, nobody's taking it. You can have it. And I'm like, oh.
Because it's an ordinary pigeon, and there are a billion of them.
Yes. So guess what? We have a pigeon as our new pet. She went and bought this big old cage for it. And yeah, so now it occupies a corner of our kitchen. So yeah.
So tell me that you're training it to be a carrier pigeon so it can at least, do some work for you.
Yeah, that's a great idea. That is a great idea. So it can yeah. I will do that. Thank you for that idea.
That would be some great marketing. Like instead of direct mail, you have pigeon delivered mail to a prospect.
For sure.
Can't ignore that.
I don't know how long it would take to get there.
Yeah.
But
it'd take a while.
Yeah. And then maybe it getting eaten by some sort of wildlife as well. So, but yeah. So we rescued a pigeon from drowning, and now it's our bird. And my one daughter said, the vet said it suffered from head trauma.
Yeah, I bet.
So now, it's actually it's white with all these. Yeah, it's very, and it's got little feathers on its feet and stuff. And so it's one of the fancier pigeons I've ever seen.
Okay.
So yeah, and there's a name for it, but I don't recall it. I just call it, I call it Eddie the Eagle. Actually, I base it after remember the ski jumper guy from Great Britain. So
no, I don't. I don't. But
that was a few Olympics ago. So yeah.
Okay.
Yeah, I call him Eddie the Eagle. Look it up if you guys are on ChatGPT or Google. Look up Eddie the Eagle, and that's.
Oh yeah, definitely on ChatGPT
right now.
Yeah,
which might segue into our next topic, AI. How's that for a segue?
Yeah. Pigeon back to AI. That's a great segue. So going back to membership succession plan, I do think it connects back to AI, not because the connection with AI is inevitable. It's just because where we are in the world technologically and what sorts of user experiences people are expecting today and are going to expect more of in the future. I think it's relevant to the topic. So yeah, the way the way you were explaining it before we hit record, membership succession plan, the idea is that, well, if you just look at the average age of members at credit unions, it keeps getting older, and lots and lots of credit unions are having a very difficult time with attracting younger generations. Yep. And so the way you put it was, to me, was very blunt, but I think also very true and accurate, which is if that problem doesn't get solved in some way, well, eventually every credit union that doesn't figure it out is out of business, right? And every bank for that matter as well. If like one particular story that comes to mind for me is there was a credit union that we worked with years ago, and I was on a call with one of their marketing leaders, and he said to me, like, Derik, our membership is declining because our members are literally dying because they're getting old, and we are not attracting new members. Yeah. And so they're just aging out and they didn't have a solution for attracting the younger generation. And how long can you survive in that mode? It's just like, I guess you're just going to face attrition until you can no longer keep the doors open, which is a really sad fate for a credit union that's been around for decades. Most credit unions have been around for a very long time. So I've got a lot of different thoughts here. This is a topic I've actually on this podcast I've talked a lot about in different contexts, but I want to hear what you think. What do you think is first? What's the cause? Like, why aren't credit unions and community banks? Why aren't they attracting the younger generation? And then let's see if we can solve all the world's problems and give everyone the solution.
Well, this is just based on what I'm no expert in this area, believe me, but I talk to a lot of people who have shared their thoughts on this same topic. And I think one of them, and it's probably not the top one, but explaining what a credit union is one of the hurdles that I've heard. And when you have to explain to somebody what you do, that's a big hurdle. So, I mean, okay, what exactly? Because when I was a kid, when I first heard credit union, I was like, do you have to join a union to be part of this credit union? Or do you already have to have credit to be a part of this union? There's a bit of confusion with the name. And, again, I think, obviously the horse has left the barn a long, long time ago about changing the name or whatever. So, I mean, there's a tiny little trend where there are some credit unions who have changed their name that have left the credit union out, where it's just XYZ Financial or ABC Financial or whatever, but then they have, in the legal documentation, the credit union is there, or Federal Credit Union, what have you. So there's a tiny bit of a trend in that area. So, and again, it's nothing against the name. It's just what you have to do to get people familiar with the name and comfortable with the name. So so that's a bit of an effort there. Whereas when you hear the term bank, you know what it means. You go, I'm like, okay, that's someplace where I keep my money and get a loan or whatever. So with credit union, it requires an extra step to explain it to somebody. And I've heard that many, many times with young people being surveyed and things like that. They're like, what does that mean? So, so I think that's one of them. The other thing I think is that a lot of these neobanks, or whatever you want to call them, the SoFis, the Chimes, that type of stuff, have really done a tremendous job in marketing. Not that their service is any better than a credit union, but they've done an incredible job in in marketing their message and getting their name out. Chime, for one, their whole thing in the beginning was like, hey, you can get paid earlier. You can get your paycheck, 3 days earlier or something like that. Whereas credit unions have been able to do this since the beginning of their existence, but they've never marketed it.
Sure.
So Chime did an incredible job at marketing that. And how attractive is that to, somebody who works in the gig economy, or somebody in college who needs that money right away for, I don't know, a pizza or whatever. So so that's very attractive as well. So when you see somebody like, oh, I'm going to go over there and check that out, and I can do everything on my phone and all that type of stuff. So so those are just kind of the two things that are bouncing around in the back of my. I know there's probably a myriad of reasons, but those are just the top ones I can think of off the top of my head.
Yeah, and I think so. When you think of the Chimes, the SoFis, or the Ally banks, and so on, first thing that comes to my mind is how smooth the user experience is. Digitally. Whether you're going to their website and going to online banking, or with the mobile app, I can just speak from my personal experience here, because when I was 18, I was going to college. My dad said, hey, there's a Wells Fargo on campus. Just go and open an account there. And I didn't know anything about finances, so I just do what my dad told me to do. Right. And so I became a Wells Fargo customer for a long time. And then I got fed up with a few things. One, most importantly, I wanted to do envelope budgeting, and they were going to charge me for every account that I needed to open. I was like, that's not going to work. A bunch of other places offer free accounts. So I had to find, a solution for that. And they were paying me a ridiculously low interest rate. It was literally 0.01% savings rate. Yeah, it was It was crazy. And so those were the main things. Like as far as if I ever needed help with something, I found their service very good. Their mobile app wasn't the best. I still have a credit card with them. Their mobile app's pretty good at this point. But anyway, that caused me, I said, I need to find an alternative. So I started looking at different alternatives, and honestly, like, because I work with credit unions, and I was like, I should probably look at some credit unions. Might be hypocritical of me if I don't at least give them a shot. Right.
Oh, yeah.
But I ended up switching to Ally Bank because Ally Bank, they gave me, like, I could open as many free accounts as I wanted. It was really easy. And actually one of the most important criteria for me is that they have 0 physical branches. And some people will hear them like, whoa, why wouldn't you want the branches? And I'm like, well, because I know that if they have a branch, there's a chance they're going to use it as a crutch. At some point, they're going to ask me to go to the branch, and I never want to have to go to a branch.
Yeah.
So it was actually a feature, like an important feature, a selling point for me personally, that they don't have branches. And so I haven't had to go to a branch in like 5 years. And that's not because of, last time I went wasn't because of Ally Bank. It's because our business accounts actually run with a local credit union. So I think I went for that reason.
Yeah.
And like my experience with Ally is pretty awesome. Like the mobile app is way more slick than the most credit unions, or even most other banks. Now, I will tell you that the local credit union that we use for our business is Mountain America Credit Union, and they've updated their mobile app in recent years, and it's pretty good.
Mm-hmm.
But there are still things that are clunky with their digital experience, like way more clunky compared to Ally.
Mm-hmm.
And I'm just like, oh man, this is a pain. And Mountain America, if you're out there, sorry, I'm not trying to throw you under the bus. I'm just telling the truth. If you want my feedback, I'm happy to share it. I'd love for you guys to make it better.
That's how you get better.
So yeah, it seems to me like there has been and there is a big gap in the digital experience, which for someone like me, and I'm getting a little bit older, I'm 37 now, but like I'm the millennial generation. I think my age and younger, if your mobile experience, your digital experience is not top tier, I'm not saying that younger audiences won't work with you, but they're going to think twice for sure. Like they'd have to have a really compelling reason to work with you if your digital experience is going to be subpar. But then what's the compelling reason? Because honestly, most credit unions and banks today, all they offer are commodities, like their checking accounts, their savings accounts, their loans. They're all the same as everyone else's.
Mm-hmm.
So it's like there's a technology gap and there's a differentiation problem. Like everyone's just the same as everyone else for the most part.
Right. Well, I think the differentiator is that credit unions, and there are some banks out there too that are very ingrained in their communities. So, and I've read story or studies and then some articles and stuff, how the younger generation really wants to do business with organizations that have a mission, or in this case, with a financial institution that goes way deeper than a transaction or a loan. They want somebody who's, so, and that's the credit union wheelhouse. That's their deal. They have a close community bond, and they do stuff for folks in the community. They really step it up. So that's a part of the story that I think that credit unions really need to shout from the mountaintops as well, because that's very attractive. I think it's attractive to anybody, not just the younger generations, but I think that's what I've heard about the younger generations. They want that kind of mission-driven organization, so to speak. So yeah, and there's a bunch of credit unions out there that are doing some really cool stuff. And then if I want to give a shout out to Backbone, that's a new coalition where credit unions can join and they can share their stories and get them out to the masses, not just the credit union industry silo. So yeah, so it's pretty neat little coalition that's growing like crazy.
I'm curious, and I'm going to ask you to make a guess here, which neither of us are going to have the answer to, but I'm thinking, all right, so there's some percentage of people that I think probably care more than others about the community driven aspect. Like I'll be really honest. For me, like there are certain causes I do care a lot about, and if there is some way for me to do business with someone that was really going to support that cause, I'm honestly, I'm having a hard time thinking of something off the top of my head, but I know there are certain things that could compel me to want to do business with them, even if there was no other benefit. But for the most part, for like a credit union or a bank, I'm like, that's nice that you donated $500 to this person at the football game, but
I get what you're saying.
How does that help me? How does that make it easier for me to do my finances, to do what I'm trying to do? I'm like, what features, what things do you have that are actually going to directly benefit me? Because I do believe that there's there's a segment of people out there that because I'll if there was I'm in like the Saratoga Springs, Eagle Mountain, Utah area.
Mm-hmm.
And if there was a credit union here that's like, well, we do stuff for Saratoga Springs and Eagle Mountain, I'm like, okay. Unless there was like a really something really powerful about it that spoke to me, I don't know if it would really draw me in. Like there'd have to be something really special about it, or like a personal connection. And I feel like one thing I've noticed, so with Metrify, we've worked with credit unions on their websites for 11 years, and we've run a lot of heat maps where we can see when a person comes to a website and they're looking at content, what do they actually look at and what do they not look at? What do they spend time on? What do they skip over?
Yeah.
And quite a few credit unions put their community involvement on their home pages.
Mm-hmm.
Like, it's like a reason to bank with them, right?
Right.
Or to credit union with them. but I've yet to see a heat map where people are looking at that content and spending time on it. I'm not saying nobody does.
For sure.
But I don't know. Do you feel like, is it a matter of making the community involvement somehow more meaningful to people at like a certain target audience,
mm-hmm.
or is it just a smaller segment of people and you just accept that? Or I mean, my personal thinking is you can do those things, but wouldn't be so much more powerful if you actually had differentiation, like at a product level. And there are some credit unions doing that. But before, I don't want to skip past the community involvement questions. I'm curious to hear your thoughts.
Yeah, because I have one more thing to say, because I was thinking, I call it the Patagonia effect. So people buy Patagonia because they make really good quality clothes. They're a little bit pricier than your normal down jacket would be, but it's well made. It's been made from resources that are sustainable. All that good, earthy type of really good stuff that a lot of people are attracted to. So, but initially you go there to buy a really nice jacket that will probably last a really long time.
Right. And like if the jacket if they did all those things and the jacket was bad, then you're probably at a dead end.
Yeah. I don't know if I would buy the jacket, but I mean, that's a great way of framing it. So yeah, so I have a Patagonia jacket. Oh, actually, I'm wearing a Patagonia shirt right now.
Oh yeah, you are. Perfect.
I didn't realize that. I just saw
it. Like you planned it.
I saw it in the video. I know. The check's in the mail from Patagonia. You're welcome. But anyway, so I call it the Patagonia effect because yeah, you deliver a great product, but the reinforcing message is that you're doing some good things. In Patagonia's case, they're doing some good things for the environment. They're making their clothes from sustainable resources or materials, whatever you want to call it. So I kind of liken that to a credit union. Okay, yeah, I'm going to go to a credit union because yeah, they have great rates. They still have they have great products and stuff. The service is great, but at the same time, oh my gosh, they're really doing some cool stuff in the community as well. And the other big thing is, oh yeah, they give a bunch of money or they donate a bunch of money to Children's Miracle Network hospitals, which is a big thing in the industry. Yeah. So I call it the great kind of reinforcer of doing business with somebody that, it just reinforces what they do and furthers what they do. So, I mean, I might be an anomaly in that area. So, and also there's another company, Tom's Shoes. So they make a pair of shoes, every shoes they make, they donate a pair to, I don't know, South America or something like that. So, and there's a number of companies that do things like that. So, and just kind of reinforces the faith in the brand that they're doing some good stuff. So that's kind of my take on it.
Yeah. So it seems like maybe its place is not as the primary driver, but as a supporting reason. Like if you make a bad jacket and say, but we're doing great stuff and it's made out of 100% recyclable material. Now, if it gets wet, it will disintegrate on the money instantly.
Right.
So.
But you want to make a good product so people will buy it, so it'll further your corporate mission of supporting, the planet Earth or whatever, and in this case, with a bank or a credit union, you want to have a good product. You want to have a good mobile experience so people will come and then they can further your mission of supporting the community or whatever charity that you are giving to. So I think they complement each other, I think. So one more than the other probably, but yeah, that's just my thought.
I like that. I feel like if you're doing good things, but your product is poor, then that's probably not a winner. If you have a great product and you're not doing good things, you could still win. But if you have a great product and you're doing good things, then that's
bonus.
That's probably the sweet spot
for sure.
So when we think about products for credit unions and community banks, so going back to what we're talking about with the Chimes, the SoFis, maybe if we talk about fintech, like in more broadly, there's been a lot of growth there. Like it seems like they're getting the growth and getting the younger audience that the credit unions and community banks want to get. What's stopping the credit unions and banks from offering as good of a product? Like, why are they being outcompeted?
Well, like the big giant banks, they have almost an unlimited amount of resources for R&D.
Sure.
So that's a big hurdle. But there are many other fintechs out there that have products and have technology that can really level that proverbial playing field. We always talk about leveling the playing field. So there's technology out there that can help with that battle. And so I think that's probably where we're going with that. But ultimately to attract that younger audience. So but I think that's a big hurdle is financial resources. I hear that time and time again. Yeah, Chase has, $5 billion R&D budget or whatever, I don't just kind of picking a number out of the air.
Sure.
Yeah. But it's a pretty phenomenal amount, and the amount of people they have behind it. And now the amount of AI behind it all, so that's a big uphill climb for a credit union or a community bank to compete against. Is that, they're just so massive, and they can just throw money at things. And
yeah, I feel like
that's one of the things.
For sure. I feel like one of the biggest strategic challenges that credit unions and banks have right now is so they're still spending lots of money on their physical branches because they still have people that want those branches.
Yeah,
and so and now I believe that the overall trend is toward less branch use and more digital use, but that doesn't mean that there's still lots of people that want the branches. So they're in this dilemma. And for anyone that's listened to the show, I've talked a lot about the innovator's dilemma, but the dilemma is how do you've got to keep your branches around to keep your existing members and customers happy, but then that means you're pouring millions of dollars into those branches that's not going into the digital delivery.
True.
That I think that's a lot of what's at the crux of it.
Yeah. Well, it's interesting that you bring up the branches. Obviously the branch is not dead, nor will it be anytime soon. It's just evolving. So it's not so much you go into a branch and you stand in the teller line. It's more, hey, if you need to make, I don't know, a deposit or withdraw or transfer funds or whatever, you can go to a kiosk and do that. But if you need to some sort of consultative stuff like getting a loan or investments or anything like that, or plan for retirement, yeah, there's that for you. And that's what a branch is good for, especially today. But the other thing is that a lot of these giant banks, I can't remember if it's Chase or somebody else, they're actually opening new branches, a lot of them. And then there's another credit union in this industry called PSECU, who has been renowned in this industry, and they're a multi-billion-dollar credit union. They've been branchless their entire existence, and they just announced that they are opening branches now. So really? And they are on the docket for me to interview them to find out why. So there must be a reason why, they are opening branches.
After you do that interview, please send me an email.
I will.
I'm really curious about that, and that's super interesting.
Me too.
So now I think where this ties back to AI is, so when I think about credit unions and banks struggling to keep up with fintech and, as you call them neobanks, where a lot of them are branchless and they don't have to deal with putting money into branches. And they all of their dollars just go into making a better digital experience.
Yep.
What's happening is the entire a lot of what we do with Metrify in our company has to do with software. So we've always kind of got our ear to the ground with what's happening in software and software as a service. And there's a huge revolution going on right now in the SaaS world where everything pre-AI was built on this idea that you need to make the user experience very smooth. So you spend a lot of time optimizing the user interface to make it very friendly and easy to use. But what that means is that the underlying assumption there is that you have a human using the interface, right? But now what's changing is that you have AI using interfaces and people not wanting to use the interface. You want to have AI do it for you, use it for you. And so I was actually just last night, I've got because I do envelope budgeting and just like when and how we run our business, we do quarterly profit distributions to the owners. And what that means is I've got to do like 20 to 30 different transfers every quarter to like put my money in all the different buckets I wanted in Ally. And I was like, and I I always procrastinate it because it's just tedious. And so last night I was like, hey, Chat GPT, has Ally said anything about having what's called an MCP server? That's where it makes it so I could connect Chat GPT to Ally and then just say, hey, Chat GPT, make these transfers for me, and it could go and do it.
Oh, that'd be cool.
I figured they didn't, but I wanted to ask, and they don't. I was like, does any bank have that? Because if I can find a bank that has an MCP server, that would be so awesome if I could do like, I'm not talking about anything crazy, but like do these banking transactions for me without me having to actually go and do it myself. And interestingly, the one that it brought up was not a bank, but do you know Nimbus?
Yes. Mm-hmm.
Yeah, Nimbus, which is powering some credit unions and banks and some spinoffs for them. They released an MCP server. Now I don't think they're actually opening it up for like end user transactions yet. I think they're opening it up for credit unions and banks to be able to use it to provide service to their members and customers. But it's a step in that direction. But my point in bringing this up is I feel like where for the last 20 years it's been about making a great user experience, a great user interface, like fantastic mobile app, fantastic website, fantastic mobile banking experience for people to use. The next era is going to be making it so that AI agents can do the work for the human instead of me having to go make 30 transfers personally. I tell AI the transfer I want, and it goes and does all of them for me.
Pretty cool. That would be, talk about efficient. Saving tons of time in your day, sir. That'd be pretty tremendous.
Yeah, I think that's where things are going. When I've brought up to some different credit unions, like, hey, I think pretty soon people are going to be using AI to complete loan and account applications. People are like, oh, I don't know if that's going to happen. No, like, because that's, like sensitive data. I'm like, yeah, there's a sensitive data problem right now, but how long is it going to be before that's solved?
Oh, they're working on that right now. I guarantee you. Right now. Because, I mean, not so long ago, we were all saying, who's going to do their banking on this thing? Are you kidding me?
Yeah, that's not secure.
Not at all. Yeah. Now I'm doing my banking on that thing almost all the time. So who's going to go on the internet and do their banking? Are you kidding me?
Right.
So yeah, it's just progression.
Yeah.
We'll get there.
Well, yeah, a lot of interesting things happening. I'm excited for it. Do you have any?
I am too.
You have any last thoughts that you're thinking about or want to share?
Well, yeah, I mean, it's scary if you want to stick on AI type of train right here, and we've all talked about, I did 60 some interviews at GAC a month or a half ago and I would say probably 99.9% of them had those two letters in every one of the interviews in some form or fashion.
Yeah.
So, I talked to somebody from HR and said, oh yeah, we're using AI in HR. I went, what? Tell me more, so it's just crazy what's going on out there. But I think a term, we talked about this before the recording, but a term that I learned late last year was how AI can make us more human. And so I have to give shout out to Josh Datar for that. So, and how it can take the mundane, repetitive tasks and kind of unleash the human to being more human with the member or whomever they're dealing with. So it just kind of relieves them from, just doing repetitive things and mundane things, the not so sexy parts of finance. So, and where you can really make that and, strengthen that bond with the member in a human way. So as opposed to an AI. So I think I hadn't heard that term before, and the more I think about it, the more true I think it is. So, and that gives me a lot of hope, as opposed to like, yeah, AI is going to automate everything. You know, we're not going to have to deal with people. We're not going to be talking to people anymore. That type of.
Yeah.
I'm kind of on the contrary with that take. So I think it's going to absolutely make us more human and stuff. So yeah, but then the flip side is the security stuff of it. But yeah,
it seems like what you're saying is that AI, if credit unions will embrace it, AI could actually enable them to be better at, you know, the big
strength.
The big tagline for credit unions is people helping people, right? Okay,
yep.
So if you leverage AI, can it make you better at people helping people? I think yes. Mm-hmm.
Which will bring the whole conversation in full circle, which I think will bring in the younger folks. So you get that message out there. So
there we go. Yeah. We just solved it for everyone. Job
done.
Well, thanks for coming on the show, Mike. Really, really great conversation.
You're welcome, Derek. This was a lot of fun. We could have gone another hour easily into many of these topics and talking about all my pets too. So
yeah. I was going to say, just talking about your homing pigeon would be a whole episode.
Yes, just the bird alone is a show in itself. So I appreciate the time. This is really kind of fun. So a lot of this stuff was off the cuff and off the top of our heads, which always makes for a great interview. I think some of my favorite interviews are all the impromptu ones where there's nothing rehearsed, Same. no script, no nothing.
Same.
So yeah, those are the best ones. So yeah, so happy to come on, and happy to come back anytime you want. It's a lot of fun.
Okay, thanks, Mike.
You're welcome, Derek. Be well, man.